Hi everyone, and welcome to Seraphim Space's first LinkedIn live session. I'm Leah Martin, and today I'm joined by Dr Maureen Haverty. She's VP at Seraphim Space. She's a specialist space investor. Today she'll be discussing her top tips and trends and all her ecosystem insights. Maureen, do you want to give us a quick intro to yourself?
Yeah, hi Lisa, Leah, thanks for having me, and hope we've got some questions coming in. My name is Maureen Haverty. I'm VP of Investment at Seraphim Space. So we're a space specialist VC founded in 2016. We invest in everything from seed up to pre-IPO, and we invest internationally. I joined Seraphim about 6 months ago. I was COO at Apollo Fusion, which is an electric propulsion startup based in Mountain View, California. We were acquired by Astra, the rocket launch company, in 2021 for $145 million. So I'm bringing operating experience and combining that with investing. Talk today.
Brilliant. Also, thanks, Maureen. So Maureen and I discussed when we first talked about what we discussed today on this session. And Seraphim, every quarter, we produce something called the Seraphim Space Index. This is where we look at all of the space tech investment globally, and we kind of chop it up and find out about all of the current trends. Maureen, would you tell everyone a little bit about what the index is and how it works and what we do with it?
So the index is something that we produce quarterly, and we do that for both our own internal purposes and also we release it publicly. So it's available on our website for everyone to take a look at. We look at all the investments that have occurred in space and also drones in the last quarter, and then we compare that versus last year and previous quarters, and that's really so that we can see how the space sector is developing, what sectors are gaining in interest, where is investment down, what geographies are of interest. We use that to inform our own investing and also just to inform the market as well.
Yes, I think so. One of the things we found out is that space tech investment has been relatively buoyant over the last 12 months, considering the economic downturn. Apparently, I think around 12.2 billion was invested over the last 12 months. Why do you think that is? What's special about the ecosystem? And tell us a bit more about that.
Yeah, so certainly the last quarter of 2021 is really contributing a lot to that overall 12 billion. Space tech investment is down relative to that really fantastic quarter that we had last year, but that's the case with all VC investment. Why is space tech doing reasonably well? Why hasn't it plummeted relative to other markets? I think honestly, we're really starting to see that space investments can pay off, that space is touching on all aspects of our lives, from climate tech to its use in Ukraine, our reliance on it now for communications, and its move into some new kind of nascent markets. It means that there's still an interest in investment in space.
We've seen some really super interesting trends over the last quarter, particularly for investing in kind of early stage companies. There's still, and we know there's still a lot of opportunities in space. Why do you think the early stage market is still particularly buoyant, and what's interesting about that?
So I think you're referring to the fact that we've seen that growth stage investing is down quite a bit. Again, that's similar to the rest of the market, whereas early stage, seed and early stage has remained fairly consistent, and in fact is up in some geographies. So why are we seeing that? So why is growth down? There's a couple of factors there. One, there's just less growth capital around. Again, that's consistent with the entire industry, with all markets. When I say all markets, I mean other areas that VCs might invest in, such as tech, software, etc. So there's less growth capital available for investment. In general, people are a little bit more conservative right now. So at the growth stage, so there's more investing going on in growth stage in the US versus Europe, which does tend to be a little bit more conservative for investing. So that's why growth investing is down. Some of the growth stage investment has actually moved to earlier stage investment. So people who were investing at the growth stage are investing a little earlier. But in general, seed and early stage, it remains reasonably buoyant because people do have capital to deploy, and at the seed stage, you're not expecting a return in your investment for a number of years, maybe 5 5 to 7 or even 10 years in deep tech. And so therefore people obviously presume the market is going to recover, and now is a really good time to deploy capital when valuations might be down a little bit, and certainly that investors can achieve better terms in terms of liquidation preferences and better downside protections than they might have done in late 2021.
So investing at the bottom of the funnel eventually, I think can potentially hopefully lead to the biggest returns. I think we reported that 64% increase in seed deals. What people would like to know, what are investors looking for? What do you look for in early stage companies? Is it go to market? Is it people? Or what do you look for?
So I think the very first thing that any venture investor needs to look at is, does this company, if it was led by the right team, if it did everything right, could it be a venture scale investment? And that means, can you achieve a very high valuation? Ultimately, $1 billion valuation, from seed up to $1 billion valuation. That's what we're looking for. For you to achieve $1 billion valuation, realistically, you're talking a minimum of $100 million in annual recurring revenue if you're a software company. That varies based on what you're doing and the valuation multiple that different investors will give you eventually when you enter the public markets or if you're acquired. But basically, you're talking 10 times revenue, so you're talking $100 million annual recurring revenue. And if you can't achieve that, it's just going to be really hard for you to achieve venture scale returns. And we as venture investors who are investing on behalf of our limited partners, we're duty bound to achieve the highest returns possible for them. So you might be an amazing company, but we can't invest in you. Okay, so let's presume that you are a potentially venture scale opportunity. We think that you do have the potential to achieve really high valuations. Why do we think that this is the right company for us to place our investment in you? Particularly at the early stage, we would look at the founding team. And that will be the majority of our decision at that really early stage. That's a little bit because we don't have that much other information. You're really establishing your go-to-market strategy there. You hopefully will have some customer traction, and certainly as you move into early stage versus seed, you really should have customer traction of some kind. And the best way for us to determine whether you're going to get that go-to-market right, whether your product is going to work, and whether you're going to actually gain customer traction, is that is the founding team. So we're looking for an entrepreneurial founding team. In space, we're probably looking for a team that does bring, tech expertise. Ideally combining the entrepreneurial experience, combining business with, a really strong science background. Hard to get that in one founder, so often we look at founders.
Yeah, I think, and one of the things that we might touch on maybe in this session, perhaps in a separate session, is our Seraphim Accelerator program, is where we work with companies at that stage, on a 3-month program, which really allows us to gain conviction. It really allows us to meet with the founders and and understand the tech and the founders, as you say, themselves, because I think backing people is really key to our strategy, at Seraphim. Let's go back to what you said about investor interest and talk a little bit about focus. I think you mentioned that investors are interested in investing in kind of build stage companies. Tell us a little bit more about that and what kind of defines a build stage company.
Yeah, so one of the things, if you look at the report, is that we subdivide space into a number of different sectors so that we can compare companies like with like. We can see where the trends are developing. And one of those subsectors is build. And build really is the hardware for satellites, the hardware for rockets, or the hardware is for your ground systems. So it's satellites, the stuff that goes into satellites, or the engines for rockets, or the ground terminals. And I would say that traditionally that has not actually been a very heavily invested in area. Coming back to the can you be a venture scale business, it was very difficult, if not impossible, for investors to convince themselves that you could achieve that really high revenue, because you're selling into the space market. They just felt it wasn't a large enough market. So what's changed? Again, coming back to the invasion of Ukraine, That disrupted a lot of supply chains. We were all quite reliant on the Russian supply chain in particular for rocket engines, electrical propulsion, are just two examples. And in the last year, that supply chain has been disrupted. That needs to be replaced with indigenous technology. And therefore, companies are being established, or they're gaining new contracts, and investors are following that trend. So that's the first thing. Second thing is that actually we've a lot more satellites now. 5 years ago, no one would have believed that SpaceX would launch 3,000 satellites, and therefore it would be really hard to convince yourself that there are really going to be that many satellites. And now it looks like we're on an exponential curve of satellites in space. So that's very exciting, and that obviously presents a very large opportunity for both startups and then for investors in those startups.
So what's the mood, do you think, of the investor community at the moment, around that? Are they they're seeing more opportunities in other marketplaces, in other areas?
I think the mood, and what I feel as an investor, is there are a lot of really excellent seed and early stage startups right now. And that is probably something that startup founders will see, is that actually the standard is just really high. I now frequently see seed and early stage startups who say, with this funding round, with really max $2 to $5 million, I'm going to be able to launch a demo at the end of next year, maybe Q1 of 2024. And I'm also going to be able to generate some sort of revenue with that demo. And I think that's a real change from, when I entered the industry, 5 or 6 years ago, it was like, oh, well, I'll need 3 rounds to get a flight demo, and generate some revenue. And that's something, it's a really enormous comparison between, the founders that are saying it's going to take me 3 rounds to actually do anything meaningful. I need $100 million. So the founders who are like, I'm going to give me 3 million and I can prove something to you. And that's generating a lot of excitement. I think that people are promising so much. And I think a lot of them will deliver. They're coming from really strong backgrounds and really successful startups themselves.
Yeah, awesome. Sticking to that point, kind of on new markets and new market opportunities, like we discovered that the Asian market is absolutely exploding. And why do you think that is? What's going on in Asia? What's going on in the US that people should know about?
Yeah, so I think one thing to take away is that all geographies are still growing, and that's exciting because it really shows where the industry can go. The US market is really quite large. Normally growth would start to fall as your market grows, but it's increasing. So growth is up in the US, in Europe, but then, as you said, Asia is growing the most. A little bit of that is reflected in the fact that it's starting from a smaller base, but really we're seeing a lot of countries, and we have a lot of portfolio companies in Asia. So Japan, India, Singapore, just to name 3, we're seeing a lot of startups being founded out of the excellent universities there. Many of those, India and Japan have a very strong national heritage of space, and then there are startups developing around that. And then there's a lot of investors based in Asia, both particularly sovereign wealth funds and family offices that are doing a lot of investing in Asia. So that's why you're seeing, it's a combination of great opportunities with new startups, but then also significant investor interest is funneling money to those startups. And because of all that, I said we've got a number of portfolio companies, Asian portfolio companies, and we'd love to have some more. So we are actually establishing an Asian space accelerator in 2023, and hopefully we'll have some more information to release on that soon. But we see a lot of opportunities, and we're really pleased with the performance of our Asian portfolio companies.
Yeah, fantastic. Now that'd be amazing to have. We'll have people on the ground out there and really just meeting startups on a daily basis. So perfect link into. Let's talk a little bit more about Seraphim. Let's talk about are the trends that you discussed earlier, are they consistent with our with our thesis and at our current investment pattern that you've seen?
Broadly is. Okay, you invest in space, but realistically, are you still investing in hardware? Are you still investing in constellations? And yes, we've done a lot of that kind of investing in 2022. We've done, We've done a number of growth stage investments, and we're investing heavily at seed and early stage. So still plenty of investing going on, still, investing in companies where hardware is the backbone, and we're investing, internationally. So we're not, there hasn't really been a retreat, for example.
Yeah. We're just a reminder to everyone that we're taking questions throughout. If anyone has any questions that they want to answer, please pop them in the chat, and Maureen and I will be happy to answer them at the end. What of these big trends and investment trends, what do you think will continue over the next quarter and long into 2023?
Yeah, I think, speaking to other investors, what they're seeing in the market, I think it is going to remain quite challenging for growth stage startups. And I don't think that's just the case in space. I think that's for everyone. So I think, really growth stage startups will need to really elevate their standards and really focus on maximizing revenue generation. We can talk a bit about that in a minute, maximizing revenue generation to actually achieve funding. I also think that, seed and early stage, they're going to be fine. There's still going to be a lot of investment going on there. I think the thing they should expect is probably stricter, stronger downside protection from investors. Investors are investing in a turbulent economic environment, and therefore they'll need more downside protection.
Yeah. I think Seraphim next year, our plan is to hopefully be able to invest in one, if not more, early stage company a month throughout next year. But from your perspective, Maureen, what is the most exciting, or maybe not one, that's not fair. We'll pick a couple. What is the other most exciting companies that Seraphim have in the portfolio at the moment, and what's your opinion on that, and who are they? Call them out.
Yeah. We have a lot of exciting companies, obviously, so don't want to favorites, but I will, I guess. So D-Orbit is a company. I'm a board observer for D-Orbit, so they're near and dear to my heart. They announced a really exciting, very long scale test, over 10 months with AWS, demonstrating edge computing. Cool. For people who don't know, that means you're processing images and you're processing data on the satellites, so you don't have to send it back down to ground. It means you can get stuff done faster, saves money, time to decision is faster. I'm a big believer in edge computing, so I'm really excited by that. We're already really proud of what ISA has done and has helped in Ukraine, providing intelligence to the Ukrainian government, and obviously, people fundraise to provide ISA imagery to the Ukrainian government. So really proud of that. And then obviously we have a very strong interest in climate tech and ESG at Seraphim. So we're really interested in food security. So we made a major investment into Taranis, which is an ag tech company. And we think that that's really going to enable food security.
What are you seeing? Are we investing in things that perhaps we wouldn't have done a few years ago? Are we investing in more companies?
I think what we're going to see a lot of in 2023 from us, and I presume for the rest of the market, is there are some things that we probably didn't believe were that possible or that realistic in 2017 that now are actually pretty normal. And I think a good example of that is I led an investment into Voyager, who are doing a space station. They have a private space station in development. And I think, in 2017, who could have believed, that, there are now 5 companies competing to build private space stations. So I think there's a lot more that's possible that we really didn't think was the case.
Yeah, it's like kind of science fiction turning into science fact kind of is at the moment just super exciting. What do you think startups are looking for, Maureen? Just to any startups who might be listening at the moment, like what are they looking for from investors, and how should they prepare to fundraise?
So I've got a number of thoughts on that. We've got one question in the chat about just a general trend. Then I'm really looking forward to giving some thoughts on how startups can prepare. So have we seen an increase in down rounds or acquisitions or other distressed exits as we've seen in other tech verticals? And that's coming in for David Martinez. So First of all, in terms of acquisitions or distressed exits, I think Descartes Lab was a very high profile one, and that was acquired by a private equity company that focuses on Earth observation and geospatial analytics. So we have seen some of that, probably not as much as you might imagine. It is deep tech. We expected that, there were a number of blogs claiming that it was going to be, hell on earth for startups at this point. The entire industry is going to collapse. That is not the case. We're seeing a lot of hiring. We're seeing a lot of contracts being awarded. There's a lot of acceleration in a lot of companies. So the industry overall is doing reasonably well, and we're not seeing that number of distressed exits. Personally, I would have thought that we would see more acquisitions at this point. There's an enormous amount of dry powder or cash available amongst the largest aerospace and defense primes. I think it's about $100 billion, with, I believe, Airbus alone has about $25 billion, as well as the fact that these are all publicly traded companies that could use their shares to acquire the company. So I would have thought more. So that could be something that we will see in 2023. I suspect there's some waiting for valuations to come down. So that's what we're seeing with the acquisitions. What can startups do to prepare for fundraising in 2023? So I think, looking at what I said, the standard is very high. You have to presume that if you're a seed or early stage company, that your competitors are promising a flight demo and revenue within this round. So if you're not doing that, I really would suggest that you go and take a hard look. Is there a way for you to do that? Is there a way for you to trade your hardware so that you can get a free flight? Give someone a long-term incentive deal to give you a free flight if you're actually providing hardware for a satellite. Is there a way to get a government customer to buy some information off you once you launch your satellite? So that would be the very first thing I would look at, and really focus on a really minimum viable product for that first flight demo. The second thing I would say is, you would be very surprised, or I hope you would be very surprised by, there are a number of growth stage companies that do not have a good handle on their finances, and they're going out and trying to raise right now. And what I mean by they don't have a good handle on their finances, they don't have a really in-depth knowledge of what their unweighted and weighted sales pipeline is, as in their unweighted is in the total potential contracts, all the contracts that they have any kind of visibility into. They don't have a good idea of the size of that, and they have an even worse idea of what the weighted pipeline is, which is that contract times the probability of you winning in it. And it's actually a really, really, really easy metric for you to get a handle on. And I think if you get a handle on that, that gives you a really good insight into the health of your business. And that's something that you should have an understanding of before you go and talk to investors. So if you can kind of try and work out the size of those, and then if they're low, focus on lead generation. And I say this as someone who comes from space, where it feels like there aren't that many potential customers, is you would be surprised. A16Z did a really good blog on lead generation and cold calling, and I've asked some startups to implement it, and they're seeing really good traction, as in they've measurably increased the size of their unweighted and weighted sales pipeline just based on that. So understand the health of your business, focus on revenue generation, focus on closing contracts, which is all very obvious, but it's something that investors will expect to see, but also will give you a healthier business. So there are just 2 tips that I would focus on for your fundraise. And then the third thing is that if you already have investors, you need to be making more frequent contact with them. A lot of, the support you're going to get from your internal investors, they're going to go out to their network. They're going to help you find other investors in this very challenging environment. And you need to be reminding them that you're the best company in their portfolio, that you are making significant traction. And so you need to be in frequent contact with them. I think probably too many people, take the money and then just walk away, and then they only come back when they need to raise a round. And I think that's going to be really challenging.
Yeah, exactly. I think being a good investor is more than just money, isn't it? I think it's we try and support our portfolios in so many different ways. And I think that's a huge part of it. Should I read out a couple more questions, Maureen?
Yeah, please do.
Someone asked, which region do you predict to be the most invested in 2023?
So I would generally say the US, because it's got the large market, it has a lot of growth investors who are, not as conservative, and it just has that critical mass, which means that it's going to have the greatest investment. And I think the other two regions probably have a little bit too much, even though they might be growing just as much or more, it would be harder for them to catch up.
Okay, one here from someone else. When you mentioned that you're a huge believer in edge computing, could you elaborate and why?
Oh, yeah. So one of the main challenges for Earth observation companies, so companies are taking pictures or sensing the ground, is how quickly can they get that information and actionable insights to customers. And really, if you're a satellite in LEO, low Earth orbit, you don't have frequent contact with the ground. You might wait 90 minutes or more before you even can contact the ground. And then you have a limited bandwidth, like a limited amount of data you can send back down. So if you can find a way to reduce the amount of data you send back down, it will cost you less. It also means that you only have contact with the ground for a few minutes. So if you try to send all your data back down, you can't. So you want to be able to send down just the information you need to the ground so you can get information into your customers' hands very quickly. So that's just a basic thing that you want to do. You could take the next step and actually generate the insight on the satellite. You could, first of all, get it to a customer's hands much, much more quickly and they can act on it. Or ultimately, you can lead towards the decision being made on the satellite. And basic ideas are process your data and then queue up another satellite. That would be to take another picture. So there are some basic ideas. It just will allow us to get insights to customers faster, and the faster you can get it to your customer, the more they'll actually pay for it because the more useful it is.
It's almost time's come to the end, but I think maybe we'll go on to 5 more minutes just to take the last couple of questions. So that's all right with you, Maureen. Yep. Someone has said they saw some interesting companies at Techstars, some companies called Phoenix Space, Canopy Aerospace. They mentioned thermal protection. What's your opinion on thermal protection, mass manufacturing? Any some of these just topics that they
I think Techstars has always had a really great bunch of companies this year for their accelerator, and that was one of the great things about that is that they actually tagged up with government customers, the Air Force, to do the technical assessment of the customers, but also that technical assessment of the companies, and also were they producing something useful. So it's really interesting, I think, that those were very hardware focused companies, and that they were a lot of that build, like, so supplying into space, supplying into aerospace kind of companies. So I won't comment on any of the individual companies. I think that'd be a little bit unfair to them because I don't know them that in depth. Yeah. But I did think that the standard was high, and I was very intrigued by how hardware and build focus it was, and that really ties back into what we're seeing in the ecosystem.
And I hope they also had a look at our Mission 10 alumni as well. Maybe perhaps see who was on them.
Yes, just so everyone knows, our 2 recent accelerators, one in the US, one based in the UK, but it's international, had some really interesting companies covering, things from, digital twins, as in digital twins of the Earth, digital twins supplying, insights into the government and helping for design of constellations. There was another company, Space, who did it's GPS denied navigation. So when GPS is down or is being hacked, can you still navigate? So there's a lot of really interesting companies there. So I mean, there's a lot of really interesting things going on in the space industry.
Do you have opinions on new startups targeting government versus commercial customers?
I definitely do. I'm not sure I have the last word. I think there's going to be loads of people that disagree with me. Certainly when we started Apollo Fusion, we thought that, and the received wisdom was all the growth was going to be in commercial customers. Commercial customers would have faster sales cycles. And that was true and it wasn't. I think that our actual very first customer was a government customer. And the great thing about that is you get a lot of honest feedback from government customers. They're not trying to, secretly acquire you. You don't know, they're not going to leak it back to your competitors. They're not going to be doing anything internal. They just give you honest feedback, and they really helped craft our product into something that we then went on and sold to, every constellation going. So that was really helpful for us. Government does have long sales cycles, but in terms of the fastest sales cycles, I would say it's smaller or earlier, faster startups, then possibly early stage government, and then the major, really large constellations and primes. So, I think you need to have all of them, but I think you need to have all of them. I suspect your fastest and earliest sale will come from an early stage startup itself.
Yeah, I think that's a whole nother topic, isn't it, for another day. And I think, perhaps governments, we've discussed before, can be more on the regulation side, and then there's also room for commercial businesses. And, so I think that's something that we could talk for another hour on. But I think we'll take one more question, if that's all right, Maureen.
I think just one last point on that. I think you need to talk to everyone with your customers, and then, see where you get your large contract. See where you get your large contracts and who signs a contract first. I don't think you should take any advice onto who the best customers are going to be. You just need to chat to everyone. You need to go after everyone. This is part of crafting your go-to-market strategy, and then let the actual data and facts inform where you focus on.
Okay, this is last question, I think, from Joshua Nathan. Maureen, what kind of technology is pivotal for growth for the space industry looking forward into next year?
I think this is even beyond into 2030s, which is a really hard question to answer. Yeah. So maybe for next year, I would say edge computing. We're going to see a lot of edge computing, and we're seeing a lot of companies focused on IoT from space. I think into 2030s, this is a big question, but I think in space manufacturing and R&D, I think we're taking a lot of interest in that. And what I mean by that is someone doing R&D or manufacturing in microgravity environment, either on space stations or on what are called free flyers. And key areas that they're looking at are life sciences, so tissue growth, organ growth, pharmaceutical development. They're major ones. Materials manufacturing is another key area as well. And it's really, the key challenges that need to be resolved there are being able to get something up to space and back down cost effectively, really clear R&D to make sure that actually you're gaining the benefits that we feel that microgravity or vacuum or whatever are going to provide. We hope it will, but that actually hasn't been demonstrated quite as much as we would like. So we'd like to demonstrate that. And then we need to be able to scale it up if required for manufacturing. And that will require either space stations, lots of space stations, humans on them, which are fully commissioned, or we'll need a really effective free flyers with robotics. I think there's huge potential there, but I think we're really into deep tech there. There's a lot of high risk stuff, especially for pharmaceutical and life sciences, where we hope there's going to be, it's got a really, really, really huge market, but you might also be adding in an FDA approval process on space, which is pretty high risk.
Thank you, Maureen. That's fascinating. Yeah, I think people don't realize how, SpaceTech is just disrupting every single industry, and it's just fascinating, even for us who, are working in it like every single day. But before we sign off, Maureen, any more comments or points you want to make? Or you?
I think the thing I felt this year, which to be fair is a very challenging economic environment, and I do feel for a lot of startups, is that we're seeing a lot more success in space, I think, than we thought we would in 2022. I think as I said earlier, there's a lot of things that we just did not believe would be possible that are now actually being totally commercially deployed. And we're now, constellations are trivial, so let's focus on space stations. Let's do lunar activity. And I really don't think that we would have thought we'd be saying that in 2022, or that charge would have been led almost entirely by startups.
Amazing. Thank you so much. Thank you for everyone for listening in today. It has been recorded, so if anyone missed any of it, we'll be sharing that on our social media and on our website as well. And we're going to be, a few people, questions have come in saying, can we do some more? And we'd love to. I think we're hopefully going to get as many as possible in next year. We're also starting a podcast, so keep tuned in for that. We're going to be launching that also in January. That's called the Generation Space Podcast, so keep an eye out for that. But thanks to everyone. Thanks, Maureen.